Hey guys, how you doing? Welcome to Wall Street Weatherman. I'm Greg, and I just wanted to do a quick show because last week and the week before we talked a little bit about the artificial intelligence trade, and it was cooling off. And I just wanted to give an update to that because it's continuing to cool off. Over the last week, I'm sorry, month, NVIDIA, which is sort of the bellwether to me for the AI trade, has uh, fallen by 12%. Oracle, which is sort of the representational data center play, has fallen 28%. And so, really, I just wanted to do this show and sort of, confirm what move was underway. So, look, this isn't a bad thing. This is a normal thing. And in many ways, it's a very healthy thing because we've talked about it before about how the artificial intelligence trade and so much that was associated with it was getting very speculative, very overbought, overheated, and in different ways in different parts of it. So this can be very healthy in the sense of resetting the market, and it's very normal. It happens throughout history. Nothing ever stays super hot. Stocks heat up, stocks cool off, and so this is just confirmation that the artificial intelligent stock play is cooling off a little bit. So just to recap what's going on, the market has looked at, again, NVIDIA is at the center of it, but even more at the center of this to me is, and what is definitely contributing to this cool off is OpenAI. OpenAI is the maker of ChatGPT, and one of the issues with it, along with all of the buying and all the speculation that goes off into areas like quantum computing and other parts of less non-profitable, less profitable tech, OpenAI is a private company. And if it's one thing that history has shown us, the markets like certainty, they like predictability. Even when there's major geopolitical events that are occurring, the market just wants to know, okay, we're doing tariffs, fine. Tell us how much, we'll deal with it. But when markets don't know, when they are uncertain, that is when the the stocks can really, get hit because they just don't have that uh, assurity. They don't have they can't, project off into the future about, discounted cash flows, all that kind of stuff. And so when you've got a huge company like OpenAI that is currently, again, private, so we can't see the balance sheet, we can't see the different operational metrics, and it's valued at over $1 trillion already. And we see the deals that are happening. We talked about the rotating financing, the circular financing, where Microsoft, whomever was investing in OpenAI. OpenAI was investing in a data center. Who was, it just keeps going around. One buys the software from one, the other buys the semiconductor chips, and so when that money goes around and we don't know, we don't have great insight into the financial health of the company, people start to get muscle memory as well. They think about the bubble of try not to use that word too much, but the tech bubble of 2000, the turn of the century, when there was all the build out of fiber and so many of the dot-com companies that just, created a website and didn't even have a business, didn't have revenue, and none of that. And the trading went crazy. And eventually, like we talk about, the market always comes back and finds the fair value. And so if there is that speculation, it's fair to think that it's going to come back to, what really is being valued here. And so OpenAI, the predictability, sort of that memory of the turn of the century, the dot-com issue back then. These are all, in my mind, what have led to the last month or so of really all of that being called into question, and the price action, which has been falling. And look, at the end of the day, I have artificial intelligence is amazing, and I have no doubt that it is already showing productivity and revenue in many different ways in terms of helping people with their own personal productivity and having an AI agent alongside of them for research and writing um, and uh, and then as far as marketing is concerned, having that deep knowledge and a need to go out and create ads and target ads, it's all coming together. And so I'm not worried like in 2000, 2001, etc., because this is real. At the same time, do I feel like there's is an overbuilding of the companies and of the data centers? And of course there is. Of course there is. We've heard everyone, all of the CEOs say this, even Sam Altman from OpenAI and Satya Nadella from Microsoft. Everyone has stated that, and that's to be expected. They'd rather spend too much than too little. Mark Zuckerberg, etc. All the big companies, and so not the same in terms of the usability and return on investment. That is real compared to 2000. Overbuilding, yes, there's overbuilding. And there's another component to it as well, and that is that, well, there are a few other ones, but one of them that I am absolutely keeping track of and watching is energy supply, energy usage, transmission, because the the electrical grid in specifically, I'm talking about the United States now. The electrical grid is decades behind in terms of keeping up with demand, and even in terms of just keeping it modern and keeping the equipment up to date and replacing what needs, everything about it. So there's a pinch point there. There is absolutely going to be a constriction in terms of the ability of the energy transmission, overall infrastructure of energy, but also energy prices, which is a part of that. So the energy prices, I've done a little bit of research, and in areas around the country, it's already starting to go up. And consumers are so sensitive to, rightfully so, to food prices, to gasoline prices, and energy prices is one of those. And when people see data centers down the road being built in massive scale, and they see, then they come home and open their energy bill and they see it spiking up, they're very aware of that. And they don't see that as something benefiting them necessarily. And whenever you have, a substantial part of the population that starts to rise up, there's an incredible power there. So the price of energy to the consumer is absolutely something that I'm keeping an eye on. And so, you know, uh, one other thing that I'll say, just in terms of something, that off the top of my mind, is also the we had earlier in the year, we had a little bit of a shock when China announced DeepSeek, which is, let's just say, a competitor to ChatGPT, and they talked about all everything that it could do, all of the performance metrics that it was hitting, and how it was just almost on par with ChatGPT, but at a fraction of the cost. Okay. That's also something that I want to put to at the top of my mind, and hopefully yours too, in terms of things to watch out for. Right up there with energy is the commoditization of these models, these large language models. That do we really need such expensive semiconductor chips? Do we really need $45,000 chips from the best companies in the world, or can this be done on a shoestring budget? Because technology over time, if it's one thing that we've seen throughout history, is that technology starts expensive and it comes shooting down. Always guaranteed. There's always innovation. There's always better production and efficiency, and it just technology always comes in. Look at flat screen TVs. I mean, it's incredible. You go to Costco now, you can find something the size of your, the side of your house for, under $1,000. It's crazy, and the quality is amazing. So over time, price of technology does come down, but the disparity between the cost of the American compute stack versus what China has shown. And again, these are not again, but to add to that, that something like a DeepSeek is an open source model. It's not closed source. Like, let's say you're a customer and you're looking at a few different options. You go with the best of the best, which is hands down NVIDIA. They've got the absolute best, most capable semiconductors that and a full stack to go along with it. A full stack being they've got the software layer to it, the CUDA software. Which is, you can absolutely go that route, but at the same time, you're locking yourself into that ecosystem. So something that I always talk about in terms of stock and trading and being in and out of the market and not being always subject to having your risk on or your money on the market, and the feeling when you have cash in hand, the feeling of the optionality of that is incredible. You can do whatever you want with it, and you can watch things happen. You can participate or not, your choice, but the optionality. So that full stack approach is incredible. NVIDIA, an amazing company. I've been a great advocate for their technology, their leadership, their vision, everything. And this company is 100% real, um, but just something to think about as well is that China component, and not just China, but just the eventuality of the cost of compute coming down, and open source models and competition, and what that has done throughout time with technology. So that being said, the last thing I want to say is that, or last two things that I want to say is that uh, over the last month, like I said, NVIDIA down, Oracle down, that technology trade overall as a sector of the 11 sectors that we talk about, technology being the biggest, technology is down almost 5.25% over the last month. Okay. It is the worst performing of the 11 sectors. The rotation, and this is where we're going, because we've talked about all this before. I just wanted to summarize, but the rotation in what are people selling? It's technology. What are they buying? They're buying healthcare. Healthcare is up almost 8.5%, while technology is down 5.25% over the last month. So we're talking about maybe a 13.5% spread there. Um, so that's where the money is at the current point, rotating into. That can always change. But for now, this is where we are in today. We trade the market that's in front of us, and that's what that's our option, the market that we have today. So just want to review that and sort of put a few thoughts out there in terms of what to keep an eye on. And that could all change this coming week. People could rotate back into tech and out of healthcare. You never know. But again, that is the flow of money. The fundamentals of stocks and of sectors and of technology and artificial intelligence, it is incredible. And no doubt in my mind, over time, this is going to be transformative, absolutely amazing for all of us. And I'm excited about all the use cases for it. That being the case, right now, there's a little bit of cooling going on and a little bit of heating up in the healthcare sector. So there you go. My point of saying all that is, at the end of the day, something can be incredible, and still the only thing that matters is are the buyers and sellers. The market and the price action are all that matter in terms of your money and the return on your money. That's where the selling is happening. That's where the buying is happening today. And last bit is, as you know, all content herein and views expressed are informational only and not advice to buy or sell any stock or equity. Guys, ladies, gentlemen, thank you for the show. Great as always. Looking forward to the next one. Thank you for joining me on Wall Street Weatherman, and I'll see you soon. Thanks. Bye, guys.